The AI market is shifting in a big way. For years, all the attention went to GPUs, massive data centers, and companies building the biggest models. But the next wave of money is moving somewhere completely different, into software that actually makes large companies more efficient. And one company is sitting right at the center of that shift while almost everyone is ignoring it. Let's break this down. If you want real upside, you need to focus on tools that eliminate repetitive human work inside corporations, not the flashy stuff, real operational tasks that suck up thousands of hours every week in finance departments, HR teams, insurance claims desks, and customer service back offices. When those tasks get automated, the savings are massive and the value is immediate. That's exactly where UiPath comes in. UiPath creates software robots, digital workers that mimic the actions of a human on a computer. They move data across applications, fill out forms, send routine emails, process invoices, and handle document checks. Once trained, these digital workers do the job faster, accurately, and around the clock. For enterprises, that means fewer errors, lower costs, and employees who can focus on higher value work. This matters because companies waste staggering amounts of money on low level clerical tasks. The moment a business sees that automation can remove that drag, adoption spreads quickly, and once one enterprise saves millions, competitors feel the pressure to catch up. That chain reaction is exactly what pushes automation from interesting tool to mission critical infrastructure. So why isn't everyone talking about UiPath already? Simple. After its IPO, the stock soared and then collapsed during the interest rate spike. Growth stocks were crushed across the board, and UiPath fell around 70 to 80% from its peak. When that happens, investors check out, momentum traders move on, the company gets forgotten. But something important happened while nobody was watching. The fundamentals quietly got stronger. The latest earnings proved it. Revenue accelerated, profitability surged. The company posted almost $200 million in net income in a single quarter. And even more importantly, UiPath delivered its first full 12-month stretch of positive net income, roughly $229 million. That shift from unprofitable to profitable is the kind of milestone that redefines a company's trajectory. The market reacted immediately with a sharp 25% jump after earnings. But the real strength here is cash flow. UiPath isn't just showing accounting profits, it has been generating real free cash flow. Operating cash flow is solid, free cash flow is positive, and this has been true for multiple years. When a software company hits profitability and cash flow at the same time, you're looking at a business entering its maturity phase. And the stock chart tells a very familiar story: big hype at the IPO, a painful crash, and then a long quiet consolidation. That consolidation is critical. It means selling pressure dried up, it means the stock is no longer in free fall, it's in accumulation territory. Historically, these boring ranges are where patient investors build their positions before the big move. If UiPath keeps executing, that breakout can be powerful. Now, consider the economics from the client perspective. UiPath highlighted a major enterprise customer expecting about $200 million in savings over the next few years thanks to automation. That's not marketing, it's measurable P&L impact. When one company unlocks savings at that scale, entire industries follow. And once UiPath is woven into a company's workflows, the switching costs become enormous. That's how an automation vendor becomes essential. Of course, this isn't risk free, execution matters. Large enterprises move slowly, deployments can take time, and customization can be complex. Competition exists, macro conditions can slow IT budgets, and that huge profit spike needs to be repeatable. This is a multi quarter investment story, not a quick trade. But the reward side of the equation is unusually attractive. UiPath has accelerating revenue, it has durable profitability, it has real free cash flow, it has customers proving massive ROI, and it trades at a forward valuation that's actually lower than the S&P 500. You almost never get that combination in an AI company with real momentum building underneath it. If you want to follow this story, focus on a few signals. Watch whether revenue continues accelerating, watch quarterly profitability, watch free cash flow conversion, and pay close attention to enterprise case studies, because every time UiPath shows another customer saving tens or hundreds of millions, the adoption curve strengthens. Enterprise automation is becoming the next major chapter of the AI boom. UiPath isn't just participating, it's leading. The fundamentals are turning, the market is waking up, and the stock is still nowhere near its previous highs. If the company keeps executing, this could be one of the most compelling under the radar AI opportunities in the market.